Good morning, everybody. Welcome to the room. I'm a couple minutes early, so I will drag my feet as the rest of the world gets here. Excited to be here today, guys. I like what I do. It's fun. It really is. Sorry, I'm gonna be drinking a lot of water today. I am on a lot of allergy medicine. Spokane in the fall is a little brutal, it turns out. Guys, checking news. Do this every morning. This is it's a part of my routine. forexfactory.com/calendar. Um, it's not even that I endorse this as a news site, guys. It's just what I've been using for 5.5 years. So it's just where I go. At 8:30 a.m., guys, there was the Philly Fed Manufacturing Index, and even though it was medium impact, it had a pretty good spike. Depending on which platform you were looking at, I think it was most prominent on excuse me, on TradingView. You can see one minute bar, guys. It was huge, from zone to zone. So just knowing where the news is coming from, or what time it releases, it really does create a huge advantage, guys. And it's not an advantage that's really going to make you money. But it's most likely an advantage that's going to keep you from giving it away. That's going to keep you from taking a trade right before there's some huge emotional response going on. At 9 a.m. we do have another medium impact. FOMC member Waller speaks. I don't know what Waller's going to say, but apparently he's more important than Barr and Mirren. So it could be impactful. As I go through the day, at noon today is crude oil inventories. Crude oil inventories is when they release the barrel count, reserves. Don't trade the actual news, but what you will find on crude oil inventory days, man, there's only 8 people here. That's all right. What you will find on crude oil inventory days is that there tends to be a lot of jockeying for position in crude oil before that release. You'll see trades that don't tend to follow through, erratic behavior, or really just stuck. And I'm not saying don't trade crude oil. I don't tell you guys when to trade. That's not my job. What I do is I let you know that market may not be moving. Keep your eyes open. And then the second thing about crude oil, guys, is right now we are in volume roll. The contracts are rolling. The volume is split between November and December, which means that you have half the volume on either one. And you'll see that even though got some good looks there, there's just not as much pushing it. And that's just, it's a fact of contract roll. It'll probably lean over to December a little heavier later today, probably tomorrow, maybe going after the weekend. 11 won't even be an issue anymore. TV still on November, which is weird because TV should be just continuous contract. So at 58.41, yeah, TradingView hasn't rolled yet. Trade your charts, guys. Trade your charts. Where was I? I don't even know. Let me drop this in here, guys. Remember that this is an educational room. This room isn't designed to give trading advice. This room is designed to help you learn to read your indicators so that you can make good decisions. It's always been that way. It always will be that way. Just a little CFTC disclaimer. And now we're going to get into doing what we do. I'm just going to go through it. Uh-oh. Hold on just one second. My slideshow's on the wrong monitor. Let's see if that's it. Nope. 0 for 2. There we go. Sorry about that, guys. We're going to talk about 2 different platforms. We're going to talk about NinjaTrader. We're going to talk about TradingView, guys. Everything I do, and I'm going to say it right now, I don't have a preference. I don't like one more than the other. I think that if you have a trading plan, you have the potential for success on either, guys. But remember that NinjaTrader is not TradingView, and TradingView, of course, is not NinjaTrader, and they have a little different approach. So, um, whatever platform you are trading, make sure that you're trading that platform. Make sure that you're trading the rules for that platform because they are different. Um, we're going to focus on chart reading. I changed this up a little bit, made it a little bigger, easier to read, guys. I'm going to hand out checklists. I'm going to hand out plans. And there's only 3 rules to get you into trades on these plans, guys. And they only take 2 charts to get it done. And I do this because we are building a foundation. So if you're brand new, all we're doing is building a foundation, teaching you to read your indicators, recognizing advantages, and then those advantages become your trades. Chart reading is about 90% of the typical day, possibly 95 depending on the day. And your active trading is only 10%, guys. And if you're 6 hours in the saddle, maybe 36 minutes of active trading. But you are going to understand through your reading, being able to look at the indicators and recognizing what's happening. You'll understand where the market is likely to continue, likely to go, likely to stop. And these concepts become ways to enter, to manage, and really to embrace the 90%. To know when your edge is gone, when your advantage is gone, and find a willingness to sit on your hands. This morning, like every other morning, we're going to learn the rules. Guys, you can simulate, practice, post in my room, get feedback, but most importantly, learn the patterns. Learn the patterns that repeat themselves. Learn the patterns that create an edge. The market has a memory, and whether it is TradingView or NinjaTrader, all of your trades have the potential to look exactly the same if you just follow a simple plan. And it doesn't have to be the plan that I give you. Create a plan, create a checklist. Give yourself concrete rules to enter and exit the market, and what happens is you no longer need your emotions. You no longer need your opinions. You no longer need the hope. Just simply get mechanical, get robotic, guys. We're going to start on NinjaTrader. This is the recipe, the rules for a high probability trend trade on NinjaTrader. Notice that there's only 3. Trading doesn't have to be complex. Trading doesn't have to be stressful. Trading doesn't have to be tons of analysis to get you into this hopeful position. Trading is really taking 3 advantages on NinjaTrader. The idea of momentum, where you have a market that's going to be very difficult to stop. The idea of a clear path, that's your second advantage. Making sure that you're not trading directly into something that could stop that market. And then being able to define an entry area using a pattern that you can prove puts you in at the absolute best spot, guys. These 3 rules create those 3 advantages. That's what constitutes a trade. A trade is nothing more than taking those 3 things and doing the same thing every day. This particular pattern, high probability trend trade, is a trade that you'll be able to back test, you'll be able to prove, typically wins up to 70 to 80% of the time. That's an edge, that's an advantage. It means that you will lose 20 to 30% of the time if all you do is follow these rules, but it's very difficult to not come out ahead at 70% winners, guys. So these 3 rules only take 2 charts. I'm telling you, you have 5 things to think about. The large chart, the chart that shows up on the left side of your workspace, is a very slow moving chart. It's a broad stroke of a brush. It shows the overall opinion of the market. It takes 1 bar to define direction, momentum, and areas, guys. Your first 2 rules, those first 2 advantages, come from the large chart. When the large chart has momentum, when the large chart has a clear path, you're going to use a smaller, faster chart. It's a refinement chart. It shows the inner workings of that 1 bar, and this is how you're going to pinpoint your entries. This is going to allow you to reduce risk. This is going to give you the ability to maximize your profit potential. Large crowd, small crowd. You're not in charge. You never will be. You have absolutely no chance of ever being in charge, guys. There's big money, people, institutions, the man, the 1%. I don't care what you call them, but they win. And in your large chart, your first two rules are designed to keep you focused on trading with the people who typically win. Your small chart kind of represents the fighters, the small crowd, the people that don't care for the trends, and they like to fight the trends, and they create little shoves against the trend. And you're going to pinpoint exactly where they're likely to fail using rule number 3. Guys, and there's not really two big crowds in a parking lot, and sometimes that retracement is just collecting profits on the way. But if you keep this visual, it's easier to go with the flow, guys. Embrace the analogy. Both charts have indicators. Areas is a very generic term that pretty much just refers to any sort of line on your chart, guys. They all have names. There's divergence highs and lows. These are magenta and cyan, hot pink, baby blue lines that print off of a pivot if your software recognizes that there's a loss of momentum in the move up or a loss of momentum in the move down. You'll get a visual indicator that momentum is dying. You're going to see Fibonacci resistance and support. You're going to see yellow 1-to-1s, and you'll even see a mid-band, which is just an EMA, exponential moving average, that runs through the middle of your chart. Anytime in this room I reference an area of resistance. It could be a divergence high, it could be red Fibonacci resistance, it could be yellow 1-to-1s in an uptrend. In a downtrend, you'll hear references to support. Support could be blue Fibonacci support, it's right in the name. It could be a divergence low, it could be yellow 1-to-1s. So knowing the difference between resistance and support is going to help you on termination conditions and entries. And then both charts also have triggers, and triggers do almost everything for you. There are small triggers, 2 solid lines, they create the small triggers. There are fast triggers, two large dash lines. These are the slow triggers, these are the big triggers. Small and large will work together to define momentum, making sure that rule number 1 is met, that first advantage is in place. Small and large triggers will define termination conditions, areas that could stop the market, making sure that on your large chart, rule number 2 is in play, that your path is clear. And then when it's time to look for entries, those large triggers will help you pinpoint with amazing accuracy where your high probability trend trade entry comes from, guys. So it's only 3 rules, it's only 2 charts, and we're going to break the rules down individually. We're going to look at them, we're going to talk about them, you're going to ask questions if you don't understand them. And then we're going to get to chart reading, and we're going to watch the live market, and if rules are met on those plans that I provided in the room, guys, we'll trade live, and we'll talk about what we're doing. But first we got to learn rules, right? Because it's not about wanting to trade. It's not about needing to pay rent or wanting to quit your job. It's about learning the process that yields the results, guys. And when you learn the process, the results tend to follow. So your large chart leads the way. And the large chart, rule number 1, says that you must have strong trigger lines. Strong trigger lines are the same look, whether it's the large or the small. Miss Jen, I gotcha. There we go. And then, guys, did that help? Swathi, did that help? Miss Jen, did that help? I just reloaded on my end for you. Yep, good, awesome. Miss Jen, are you in? You are not the first lady to ignore me. Just saying. She'll answer in a moment. Guys, strong triggers is the same look on either chart. Strong triggers is always strong triggers. Weak triggers is always weak triggers. And all you have to do is learn the difference between the two. So on the large chart, your background color will define trend. Thank you, Andy V. If it's green, the market's going up. If it's red, the market's going down. The easiest approach to being successful is simply trading with the direction. In an uptrend, looking for rules to be met for high probability trend trades long. In a downtrend, looking for rules to be met for high probability trend trades short. Your first rule is strong trigger lines. In an uptrend, both small and large triggers must also be green like the background. And in a downtrend, Both small and large triggers must also be red, just like the background. Guys, if the colors don't match, there's this little fleeting moment of indecision where it's better just to sit on your hands. You don't have your advantage. Strong triggers in an uptrend means that your small triggers are up and they are above the large triggers. Large triggers are widening, small triggers above equals odds favorable for the market to continue up. This is your strong trigger look, and it's that separation, that space between, lets you know that the odds are favorable for the market to continue up. In a downtrend, small triggers are down and below the large triggers are widening, and when you take those widening large triggers plus small triggers below, the odds are favorable for the market to continue down. Now you're going to see a lot in the room from my NinjaTrader users where people annotate on the chart OFM, odds favorable momentum, guys. This is a look that's very difficult to stop when you see it on a large chart. This is a look that we're going to lean on to break key areas, to take what we call medium probability trades. And guys, this look will even cover some of the mistakes that new users tend to make. And momentum is always separation. And when the small triggers are no longer separated, when they work their way back inside of the triggers, this is weakness. And weakness, anything can happen up or down. So you get to make a choice. Do I want to trade a market where the odds are favorable for it to continue in the direction of my trade? Or do I want to hope it does something that the indicators are telling me that it may not do? And that's only a decision that you can make, guys. But if you lean on that advantage of momentum, that advantage of momentum is hard to stop. And you're going to see it a lot in this room where people take that momentum and the clear path, and they're not even waiting for the first entry, guys. They've grown outside of it and they're finding more ways to make money. And once you learn these first two, life is pretty good. So let's talk about termination conditions, areas that could stop the market. We want to make sure that there's room to profit targets. It's a very big part of what we do, guys. And you're going to see that the majority of losses presented in this room are trading into areas. And that was my challenge as a brand new user, because termination conditions are going to keep you in that 90%. It's going to keep you a little bit patient, and we want to insist on a clear path, guys. So when we talk termination conditions, these lines on the large chart, all these areas, these are where the large crowd tend to make decisions, guys. This is where people enter, where they exit, where they fight. This is where reversals tend to come from. So in order to define a termination condition, there's a very specific thing that must happen before you can call one of these lines a termination condition. The large crowd has to get there. Price reaches an area, guys. Dynamic Renko bars go up and hit Fibonacci support. Guys, can you hear me okay? Give me a Y if you can hear me. All right. So let's let Jen know. Guys, if you ever can't hear me, and I will try to reload too, but if you ever can't hear me, all you have to do is let me know. I'll ask the room, and if the room's like, hey, guess what, Mark, we can all hear you, then you know it may be on your end. But I'm going to try to reload real quick, guys. Sit tight real quick while I close down Discord and come back. Alright, I am back. Still have to get the feed up. Can you guys hear me alright? Miss Jen, did you get me? I don't want you guys to miss anything. We have volume, everybody. Just anybody give me a Y. Let me know we're back. Nobody has volume. Okay, thank you, Pete. So now we're going to go through termination conditions, guys. Price reaches an area. I think that's one of the most important phrases ever, because when price reaches the area, decisions are likely to be made. If price has not yet reached the area, well, that area is a target. That area is not. You're good? All right. So when price reaches an area, you're done with price. You no longer need price. The price bars are irrelevant for the high probability trend trade. The trigger lines will tell you everything that you need to know. So get in the habit of counting trigger lines when price reaches an area. And if price gets a little bit above, we're still counting trigger lines. If price gets a little bit below, we're still counting trigger lines. And if none of your trigger lines, 0, have made it through resistance, resistance is a termination condition. And if none of your trigger lines make it through support, support is a termination condition, guys. And it'll look like this in the live market. And really, every line you reach will be a termination condition for a moment. If you're already in a trade, you might make a decision to hold. That's fine. But if you're not in a trade yet, by not trading directly into an area that could stop the market, an area that could create an untradeable bounce, an area that could reverse the market completely, what you're doing is you're saying, my money is more important than hoping this area breaks, than trading back into something that's already created that problem for me. So if price reaches an area, no triggers break, just no trades into the area. Assume it's going to hold. Assume it's going to bounce. Assume that it may reverse. And guys, if it reverses the market, it gets the moniker, it is now a strong top or a strong bottom. When a termination condition, no triggers through, reverses the market, this is one of the most impactful things you can see, and it sets you up for the highest probability trend trade short or long after a strong top or bottom. It's not a rule, but it sure does create a little excitement. Areas don't always hold. If they did, we'd be caught in a range forever, right? Sometimes areas break. Sometimes resistance, they just plow right through it. So we're going to let the trigger lines tell us when areas of support and resistance are no longer a factor, no longer something that we're worried about. And again, it goes back to counting triggers, guys. If price reaches an area and none of the triggers break, the big red 0, no trades into the area, rule number 2 is not met. If you're following that KISS plan, you're not allowed to take a trade. According to the KISS plan, not according to me. If 2 triggers break above the area, break below the area does have the potential to break as long as you have momentum. But man, this is not your best look, guys. And more losses are taken on 2 trigger looks than are 1. So there isn't really an edge, but a lot of you will grow into taking those. When you have 3 triggers through and momentum, notice that it went yellow but not green. You can take a high or a medium probability trend trade. You can look for an opportunity to trade that potential. But guys, potential is a very key word there. It's not a clear path yet, which means that if you're only trading potential, you may have to manage a little more assertively. You're going to lean on the idea that momentum is mandatory. You're going to look for a nice low risk entry, guys. And these are the second trade on the plan that I gave you. It's called a 50-50 trade, guys, and it's the potential to break. And there's a lot of opportunity there, but it needs to be managed. And then finally, when all 4 triggers clear an area, if all 4 triggers get above resistance, resistance is now behaving as support. If all 4 trigger lines get below support, support's now behaving as resistance. And guys, this is crude oil this morning, and I just want to show you how effective Fibonacci can be. Price reaches Fibonacci resistance, there's your giant untradeable bounce. Off of resistance, back to support, back to resistance, all the way down to support, back up to resistance, and back down to support. And guys, there will be times when areas are stacked. There will be times where there's consolidation and confusion. And guys, this is about 90% of your day. But there will also be times when you have momentum, when the path is clear, when you see these tails on a large chart. That's your potential entry on a smaller, faster chart. And we'll come back and look at that one. And you'll see that there's opportunities with the potential to break, to maybe pinpoint where the market is most likely to continue, to have an opportunity to take quick profits, to manage assertively. And all of those tails that you see on a large chart, those are potential entries on a smaller, faster chart. But those tails are easier to pinpoint. They become higher probability when you are working with both momentum and a clear path. Are there any questions about the first two? Any questions about identifying momentum? Any questions about what defines a clear path? Because once you have these two guys, you've got the keys to the kingdom. You have everything you need to build your own consistent plan. You have everything that you need to be profitable, to be consistent, to be just smothered in advantages. Your third rule for the brand new user is nothing more than an entry rule for a trend trade, guys. And it's a pattern. It's the same entry every time. And it's so specific that you'll use a limit order. It's so accurate that you'll wait for the market to come to you. And you're going to use a limited order to buy or sell a pullback, that little fight by the small crowd. And you're going to do it in an area. You're going to do it at a fib, at a mid-band, at a yellow 1-to-1. Because areas on the small chart can create a bounce to go in the direction of momentum and path. The same way on a large chart, they can create a bounce that ends a trend. So we're going to use a limit order to buy or sell a pullback inside of triggers. And that is the key phrase to entry. And if you write down area inside of triggers, you will call your shots long before the entry ever happens. Because when going through the entry process, guys, first it's a pullback, and it's a pullback to an area, and that area is inside of triggers, and they all work together to give you a bounce in the direction of the trend. So triggers is so important. And I feel like in the first couple of years, I didn't stress this enough. Triggers are moving averages. And there's this phenomenon that happens, guys. It's a mathematical thing. Price returns to the moving average. When the numbers move away, the numbers typically pull back. And trigger lines will be used to define where the retracement is most likely to go. Good morning, Wayne. Good to see you. So this is your entry pattern. And if you go to the spreadsheet that I gave you, there's about 500 pictures of this exact pattern happening with momentum and path. And guys, everything begins with a reversal bar. When your large chart says up, and your large chart has momentum, and your large chart has absolutely nothing in the way, your small chart is going to be railing north, guys. It's going to be going up, and most of you are going to have to contend with what we call the fear of missing out. This idea that a market that trades billions hourly, millions hourly, trades, so much money, that one move is the last move, that one little run is the last run that's ever going to happen, guys. And the reality is the market moves in patterns throughout the entire day. This reversal bar is going to be the beginning of the pullback. That's the beginning of your entry pattern. And the reversal bar is not your entry. And guys, if you couldn't hold your water and jumped in, this reversal bar is actually an amazing exit, because that signifies a little loss of momentum that starts the pullback. You can define right where the pullback is most likely to go using the large and synthetic triggers. And it's just the large triggers from both charts put onto one chart to increase accuracy. Somewhere from the top line to the bottom line. That's where these down bars are most likely to go down. But trigger lines aren't bouncy, guys. They rarely create a ricochet. You need an area inside of those trigger lines to produce the bounce typically. So you're going to be able to say, okay, the fight has started. It's most likely to go all the way to the bottom of this line, but it's the areas inside of triggers that are most likely to create the bounce. Sometimes you'll have multiple areas. Creates a window. We'll call it the window of opportunity. Somewhere from the highest point to the lowest point is where this market is most likely to bounce and continue in the direction of the trend. So if you're paying attention, before the reversal bar ever prints, you know exactly where the market may retrace. And you know exactly where the market may bounce and continue with all of those large chart advantages, guys. It's precise. But because it's a window, because it's multiple areas, your job will be to activate a limit order just above the highest point of support, closest to the reversal bar. This is your entry. because with all of the momentum and that clear path, we don't want to miss a trade. I don't want to miss a trade, guys. I don't want to stumble over a stack of pennies hoping to save a few dollars. And because you've defined where the market is most likely to retrace, because you can define exactly where the market is most likely to bounce, you're going to learn to ignore any area that's on the other side of the triggers, below the triggers in a long trade. This is where the advantage of rule number 3 is no longer in play. Once the market can push through all the good stuff, guys, I don't want to be in that trade anymore. This is where the market shouldn't go if this trend trade is going to be a winner. Once it gets below those triggers, you don't know if, when, or where the market may continue up. In a downtrend, when the path is clear, when the momentum is strong, we're going to patiently wait for a reversal bar, guys. And this reversal bar lets you know that the fight is on, that the pattern has started. You can define where the market is most likely to retrace using the large and synthetic triggers, somewhere from the bottom to the top. I don't know where, but somewhere in that range. But it's most likely to bounce from an area inside of triggers, guys. And I capitalize it every time. Area inside of triggers. This one line, this mid-band, represents where the market is most likely to bounce and continue in the direction of the trend. Your job is to activate a limit order just below that mid-band and hope the small crowd comes and gets you. And you're going to recognize that anything beyond the triggers is where your advantage is gone. You're no longer in the retracement zone. You're beyond all the areas that were most likely to create a bounce. This is where the market shouldn't go. And when you get out into this no man's land, that's where stops are going to reside, guys. That's where initial stops are going to be placed. Because your simple pattern for a high probability trend trade defines exactly where the market is most likely to continue. And by doing so, it defines exactly where the market shouldn't go. And 20 to 30% of the time, when you take a high probability trend trade, it's likely to hit that stop. This becomes a cost of doing business and not a failure. This becomes just a normal part of a positive equity curve, guys. Every 10 trades you take, that stop is likely to get hit. But what's important is the consistency of the entry, because every 10 trades you take, 7 or 8 of them are likely to go in the direction of the trend. So this is your whole pattern. It begins with momentum, and then you couple it with a clear path. And when you have both, guys, the market's all the way up here at 97.05, and you are scared to death that you're never going to make any money as a day trader. And then the pattern begins, and then they retrace, and then they bounce from the area inside of triggers, and suddenly you have the least amount of risk because you waited for the pullback, and suddenly you have the most distance to get up to trouble because you waited for the pullback, guys. And this is a pattern that's consistent, and this is a pattern that happens daily, and this is a pattern that as soon as you learn it, you'll be able to go back and look at your large chart, and you can circle these tails, and you can say, you know what? That was a pullback to an area inside of triggers with the potential to break, and I want you to see something. That was your entry, and it was nice. And then losses of momentum began to print on the small chart, and the idea on this potential to break trade is that you don't want to sacrifice momentum, and you see it on the small chart, and you want to make sure that your entry is well defined, and you see it on the small chart, and 3 divergences in the same price range can terminate a trend exactly as it did right here when the market only had the potential to break. Back it up. It's another pullback directly to an area right inside of triggers with the potential to break. All of that momentum in the market continues down. And back here with the clear path, let's take a look. Would you guys like to do an entry together so that you can see just how you'll be able to call your shots? I think this is one of the most powerful drills that you can do as a new user. When you see that you have momentum and path and you circle that tail, guys, that's a great way to study. Hide that tail. Does everybody see the momentum, the separation between the small and large? The idea that there's 3 of the 4 triggers through? This is beautiful, guys. This is what your small chart looks like when it's time to look for a trade. So if you're one of my NinjaTrader users and you're struggling timing out your entries, I want to show you how you can make it so much easier. Good morning, Sergio. Before I ever get the reversal bar, I know exactly where my trigger lines are, and that defines where the retracement is most likely to occur if I get a reversal bar. And I can already see the areas inside of those triggers, and all I need now is a reversal bar, and I have already called my shot. I've already got a limit order waiting just above that midband. And if the market continues up, as it does, you'll notice that my window changes a little bit, that my midband goes up, that this lower support is no longer inside of those triggers, and now my entry is a couple ticks above that midband. And I knew about it 5 bars ago, 6 bars ago, 7 bars ago. And then the market comes down, and the midband rises, hopefully to meet it, and boom, I'm in the market with momentum. And I'm in the market with that path, and I'm in the market from the point where the market is most likely to continue. And guys, as long as it stays above those low triggers, that low line, the advantage of rule number 3 is in place. So if it goes against you a tick, don't panic. If it goes against you 2 ticks, don't freak out. You still have an advantage. Still in it, still good, and check it out. Now they're going in the direction of your trade. Now they're moving in the direction of momentum. They're moving in the direction of the path, and off they go to the promised land. This is your pattern, guys. You will learn to anticipate it. You will learn to wait for it, and great entries give you room to get to trouble, guys. And that tail on your large chart, get in the habit of going back and circling those tails. It's the low point of that pullback to the area inside of triggers. And guys, all of those shenanigans on the small chart happened inside of 1 bar on the large chart. This is your high probability trend trade. This is the pattern that repeats itself every day. As a brand new user, this is the pattern that's going to help you find success. Don't care what market you're in. Doesn't matter if you want it to go up or down. The market's going to do what the market does, guys. And I'm looking to see. There was momentum in path, and I circle a tail. And as I pull back, sure as the day is long, it pulls right back to a mid-band inside of triggers and continues up with all that momentum. Guys, that's the NinjaTrader high probability trend trade. Everything you need. And now we're going to go to TradingView, guys, but I'm going to take about a minute and a half, and when I come back, we're going to talk TradingView. Stretch your legs. TradingView is going to be different than NinjaTrader, guys. TradingView still uses one-to-ones, mid-bands, divergence highs and lows, but there is no Fibonacci on TradingView. And it's not necessarily a negative, it's just different. And if you want to get the most out of TradingView, areas of supply and demand are awesome. There is a company called Chart Prime. They offer these areas. They're extremely accurate. It's about $50 a month, guys, which is a small investment for that level of accuracy, but you'll have to make your own decisions. If you don't want to pay for the tools that you're trying to get rich with, see how I phrase that? There's free options, guys. They're not as good, I don't think, in my own personal world, which is why you will see these zones on my chart because they are crazy accurate. Um, but that's the difference, guys. There's no fibs. There's zones. There's still trigger lines. Momentum is still defined with separation. Um, but you're going to treat zones like fibs, guys. They're going to be potential termination conditions, areas not to trade into. So it's still two charts. There's a 15-minute chart. This is your big chart, guys. And if you're one of my Rinko users making the switch, you have to learn to read this chart differently. There's so much that can happen inside of 15 minutes that in the plan that I give you, I remove the large triggers because it's so slow they don't tend to pay dividends. I even remove the background color because you don't even need a background color to know which way your highest advantage comes from. So your 15-minute will define direction, momentum, key targets, and terminations. That should sound familiar. Your 1 minute, still a lot of time in a 1 minute, guys. That's not a fast, rapid 2 to 3 second bar like Rinko can be. It takes a minute, start to finish. And this is going to define the immediate strength of the market using those trigger lines the same way we did on NinjaTrader. And this is what's going to define entry points. And again, you're not in charge, guys. This plan is designed to optimize your chances of success, keeping you in line with the people in control and embracing fluctuation in order to find the best of the best entry. So learn how to read your large chart first, guys. If you stare at the small chart, it's going to talk you into all sorts of nonsense. So read your large chart first. Everything begins on the big chart, guys, and direction is defined by whatever direction the small triggers are going. So your options are up or down. That's it. And if you look at your large chart and you're like, man, they could be going up, they might want to go down, I think they're about to change, guess what? You can't define direction, which means you don't have the advantage of going with the direction. Sit on your hands. Let them figure it out. And now I'm going to blow this up. Man, we've all been victims of staring at the small chart. I always call the small chart the sirens, guys, and they will lull you into their beautiful look, their beautiful voice, and then you will crash on the rocks. So does everybody see the triggers are up? Most current bar, triggers are up. I'm only looking for long trades. That defines direction. And then I'm blowing up that picture. And the second question that you're going to ask is, where is price? Where is the most current price in relationship to the triggers? Here's a little trick that you can do until you get good at defining it. Draw an arrow, whether it's imaginary or physical, on the small triggers and just extend them into the universe, guys. Take them off to infinity. There's only 3 places where the market is going to potentially be, where the current price will be. It'll either be left of the triggers, it'll either be right of the triggers, or it'll be inside of the triggers. If you are left of the triggers, whether the market is going up or down, you're on the strong side of the triggers, guys. This is your best. Like, this would be the equivalent of odds favorable momentum. When you're on the strong side of the triggers, this is where I see you guys holding for typically larger moves. This is where 1 minute areas have the potential. They're most likely to break if they're going to break. This is the best look. This is the look. If you're a momentum trader, you have to be on this strong side. That defines the best momentum. If you are to the right side of the triggers, most current price is down below those up triggers or above those down triggers, guys. This is the weak side of the triggers. And again, I hope weak paints a picture in your head. I'm still looking for long trades from the weak side of the triggers, guys, but my management hat is strapped on. It might even be a management helmet, guys. This is where 1 minute areas are most likely to create bounces, to be problematic. This is the look where in my own life, I'm getting paid at the area. That's it. I'm getting paid, and I'm not hoping things break. And if it does, whatever, not my money. 1 minute, I manage a little looser. Or I'm sorry, strong side is a little bit better. Maybe bigger holds. Maybe getting to break even to see if they break. Weak side, guys, I'm collecting money and waiting for the next trade. You may choose to do the same thing. And then if price is directly inside, guys, transition. It's not strong. It's not weak. It's still a great look. And I'm being very aware of the things that can create bounces. And I'm being very aware of protecting my investment. And this is the look where we're like partials. If I'm in two contracts, one of them comes off at trouble in transition. I get to a zero loss level. And I'm willing to be stopped out at break even rather than taking a loss, because from transition, it's iffy. It's maybe. It's anything can happen. So you're going to be able to define direction and momentum using nothing but the small triggers and where price is in relation. And then the most important question, and the question that shows up on every checklist that I give you, do you have room to targets? Is there room to make money? Is there enough space between where you're going to enter and where the market may stop in order for you to justify entering the market? If the answer is yes, and only if the answer is yes, you'll go to the smaller, faster chart. You'll go to the 1 minute chart. And I reverse the order how I present these guys. The most common trade that you will take is what we call a trend trade. What a wonderful thing, right? The trend is your friend. And there's only three things that you're really thinking about. The first rule is that the 15-minute, the big chart's not trading in anything, that you have room to targets. And I stress this so heavily in the room because this really is the most broken rule. The second thing is that your 1 minute's not trading directly into areas, whether it is one-to-ones or a zone or a mid-band or an outer band. Guys, you've got to have room to targets. And if the first two rules are met, the trend trade says that you're going to buy or sell a close at an area at a mid-band at yellow one-to-ones. But it's not like Ninja Trader. You're not just getting in at the area. It requires a close on the correct side of the trigger. So if I'm looking to go with the trend from transition with room to the targets, the moment these small triggers roll against me on the small chart, I start looking for areas deeper, lower. And when they finally get there, I don't just enter. It takes an up bar, a bar that is actually going the direction of my trade, and both corners of the close have to be above those triggers. Both corners, guys, and that's a little safety tip, because what it means is that you've gone from the strong side, from the transition side, and now you're on the weak side of the triggers that were against you at the area, and that is what sets off the trend trade. In a downtrend, it's the same look the other way. First it is defining direction, then it's defining momentum, and then it's making sure you have room. And the second those small triggers roll against you, you're waiting for a pullback to the area, but you're not just entering, you're waiting for the down bar that finishes on the weak side of the triggers. That's your trend trade entry, guys. And if you go back and just look at your 1 minute chart, and you see how often the market continues and doesn't change direction until it gets to the other side of the triggers, and how the market continues up and they just can't change direction until they close on the other side of the triggers. And guys, it's that little piece that's going to keep you from getting run over very often. Remember that the plan that I give you is designed to optimize your chances of success, to give you the highest potential for wins. And then the second trade, and the least common trade, and maybe 10% of your trades, is what we call a momentum trade. And a momentum trade is a very specific pattern, and it starts with no terminations on the big chart, and it starts with the big chart on the strong side of the triggers, and you have to have strong triggers on the small chart. And guys, this is the only trade where you're going to use a limit order, and what you're looking for is this quick snapback to an area. You're looking for price to get above a zone, above trouble. That's the break. That's what turns resistance into support. And then you're looking for a very quick pullback. And you have to have strong triggers. The smalls can't turn against you. And if you get that pullback, you'll be waiting for it with a limit order right at an HVA, right at 1-to-1s, right at a zone, guys. And this is a very quick trade, and this is a very low risk trade, but this is only about 10% of your trades. And guys, this trade is nothing new. Nothing that Nexgen has done is new. There's minute bars in 2004 where the market breaks below the area with strength, pulls back, you sell, and you're hoping that momentum carries you. Your trend trade is the exact same thing. These are minute bars from 2004. It pulls up and back, and you don't enter until it closes on the correct side of the triggers. And that's where the advantage comes from, guys. And this is a consistent methodology that we've been teaching for the better part of 30 years. When you're on the strong side, when there's room to trouble, with strong triggers, you can use a limit order to sell that little pullback. And guys, it's the break and the pullback that creates the momentum trade. Now, there's a lot of you in the room that aren't even waiting for the break. And you're jumping in when price closes below with all that momentum. And it's a cool little adjustment that I see you guys making, finding more ways to take advantage because you understand strong side of down triggers is more likely to break the area. But guys, look what the market did right at the area. It goes sideways for a minute. Decisions, fights, they're being made. So that is my spiel. I tried to go a little quicker for you guys. Once again, I have given you, and I will give it again right now, for Ninja Trader. The KISS plan is designed to optimize your chances of success, guys. This is the best of the best, not the only. This is designed to teach you to read your indicators. This is designed to teach you to recognize advantages. This is a foundation, a platform for you to jump from. And through study, simulation, class feedback, and practice, you're going to write your own plan, guys. And I like it when you guys write your own plans. When it is personal, you're more likely to follow your plan. On TradingView, same thing, stepping stone. Both of these plans describe the rules, show you what they look like, tell you where to find them, and both of these plans give you a checklist for entry, guys. This is your foundation. This is the best of the best if you're a brand new user. And the further you guys stray as new users, the more likely you are to struggle in your journey. The second thing that I gave you, and I'm giving you again, are the spreadsheets for both platforms. This is the Ninja Trader spreadsheet, guys, and it takes, on the first page, strong triggers, clear path, and entry. It highlights them in green. This is what it looks like when the rules are met. It also shows you what these looks are when they're not met, when you have weak triggers, when there is a termination. Guys, I've done a lot of work to give you a lot of visuals. You will become a chart reader faster if you mimic the work, if you start taking pictures of these advantages and annotating on the chart why they're advantages, guys. Commit them to memory, learn the looks. Over 500 pictures a client trades, and if I just click on one, I want you to see something here, guys. Come on, here we go. Bum, 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 bum. First, it's momentum. It's the potential to break. And it's a pullback right to areas inside of triggers, guys. And it's the same patterns that we see over and over. This particular chart is from crude oil, June 2023. And it's the exact same pattern that we talked about. And you'll notice that he circled a tail over here. It's the exact same pattern. You can commit these patterns to memory by studying these pictures. There's a place for you to put your pictures, guys, and there's a tracking sheet. And the tracking sheet goes back to your annotated pictures, your recognition advantages, and most importantly, the feedback you got from class. In TradingView, I've started the work for what it looks like to have a trend trade, to have a momentum trade, ideas on management, when not to trade. I want you to do the work. I want you to commit these looks to memory. put them in the room, post them. And then finally a trend tracking sheet as well. And the way the first hour works, and the way the first hour always works, guys, is I tell my class, I will give you what you need. Swathi, will you show me a picture of it, please? Let me see what it looks like. Sometimes what happens, guys, is, and this is why I ask for the picture, sometimes you open up your charts and you're like, man, I see colors, but I don't see any indicators. What gives? What's going on? If you see that in the upper right-hand corner, there's an F. If you click it, it'll bring things back into view. Sometimes you'll say, man, my charts aren't moving. They're stuck. If you see that, click this arrow up top. It'll bring you to the most current bar. A lot of times, and that was my issue in the beginning, I would send my brother a message and say, John, my indicators stop working. That's when I learned how to scale my charts. So show me the picture and let's see if that's what's going on or if I need to get you over to tech. Guys, I've given you rules. And now it's on you to learn the rules. Each of you can simulate. You can practice. You don't have to risk money. Guys, you can go to the batting cages. The first step in becoming a confident trader, ASAFP, guys, is post in my room. And a lot of you guys are posting in my room, and we're about to go back and look at all of those. But here's the deal. And guys, I want you to take this at least a little bit seriously. If you post in my room, this is an educational process for you to learn to read your indicators, to recognize advantages, to make sure that life is good. I really need you to define the momentum that you see. I want you to tell me whether or not you had a clear path, and I want you to tell me why you entered where you entered, right? Or maybe even why you exited where you exited. Oh, so here's what you need to do. Swathi, you got some funky data. I want you to right click on your chart and go to reload all historical data and just click it. And what that's going to do is that's going to tell Ninja Trader to get its poop in a group. And it should set you right, no worries. So just right click on the chart, reload all historical data, and that should fix whatever ails you. Let me know if that doesn't work out, and then we'll get you adjacent in tech if it doesn't. But guys, it worked, awesome. I'm the best tech guy ever. Guys, when you write on your charts, you're doing two things, and I can't stress this enough. The first thing you're doing is you're telling me how you're reading your indicators, guys, and my job is to make sure that you're reading your indicators correctly. You're saying, hey, Mark, this is strong triggers. And what you're asking is, did I read my indicators right? And most of you get strong triggers, absolutely no worries. And then you're saying, hey, Mark, this only had the potential to break. And what that does is it lets me know that you understand the idea of a clear path and that you understand when it's only potential. And we're going to talk about the idea that this sets you up for management because you have to manage this trade differently. The entry rules are different. And then if you write pullback to an area inside of triggers, it lets me know that you understand how to find the best of the best. Guys, I love it when you win trades, but nobody has sent me a check yet, so I'm not concerned about the money. What I'm concerned about is the process that tends to yield the results. So do me a favor and make sure you annotate your charts. In Ninja Trader, I want to see momentum, path, and entry on every chart presented. Because when it's right, when it's good, when it's perfect, what you've done is you've written a recipe. You've created a neurological connection between what your eyes see and how it defines those advantages. And you've literally written a recipe for success. You make this trade repeatable. You make it testable. And you can prove beyond a shadow of a doubt that it wins more than it loses, which gives you the edge and the confidence you need to take that trade. If there was a challenge with your read, guys, if you said, hey, Mark, price got below that area, so I know it was a clear path, then you open the door for the lesson on termination conditions. If you tell me, hey, Mark, the triggers were all red, therefore I had momentum, it opens the door for a lesson on momentum, guys. And a lot of times as brand new users, we're so hell-bent on taking the trade that we don't always see the things that could rob us of success. So do me that favor. On TradingView, guys, I need you to do the same thing. I need you to define direction, whether you are strong, transition, or weak, and if you had room to targets. And if you do this, I want you to go and tell me, did you take a momentum trade? Because a lot of times you guys will say, hey, Mark, I took a momentum trade, but there won't be any momentum. And I'll say, I just want to make sure you recognize that you forfeit that advantage when you take this style entry. And if you took a trend trade, I want to be able to see the close on the correct side of the triggers, because very often you guys will say, well, I saw it get above the triggers and I entered. And then it comes down and you get stopped out and you're angry and you miss the great trade. So guys, make sure that you're taking the time to tell me what you're doing, why you're doing it, and post in the room. It's hard as a new user to post in the room. It's terrifying to put yourself out there. And very often you guys will lean on the brags, the hey, look what I did, look at all the money I made, look at how awesome I am. And guys, that's great. I want you to brag, and I'm making highlight reels every day. And then the reality is that the challenges that you face, the losers that you take, the little problems that creep in and create those losers, guys, 99% of them are fixable. If you show me 3-4 charts that are well annotated, I'm going to know exactly where your challenges are, and then we're going to start to work together to fix them. So when you post in the room, remember, it's an educational room, guys, and I'm not the trade police. Every trade, I'll go back to momentum, path, and entry. Every trade will talk about what's good, what's missing, what can be done better, and all that stuff, guys. And when you focus on these things, you begin to realize that you don't have to be in every move. You begin to realize that you're in control of the entry. And when you know which advantage is missing, or when you know that they're all present, it's going to set you up for management. So post in the room, and guys, start taking pictures. Take pictures, annotate pictures. I fought this tooth and nail for almost 3 months. It cost me $5,000 because it turned out that I didn't have any freaking idea why I was entering, and I didn't have any idea why I should be exiting. The more pictures you take, the quicker you'll get to where you want to be, guys. My library is, let's see how many pictures I have. I'm almost 17,000 pictures deep. I'm over 9,000 pictures for the year. Trading is work, and you will get out of trading what you put into learning how to trade, guys. So take pictures. If you take a picture of a strong trigger, drop it in the room and say, hey, Mark, look at this strong trigger. Am I reading it correctly? And I'll say, darn right you are, you great student. So Nexgen gives analysis, the rules, the coaching. Guys, you're responsible for becoming a trader. You're responsible for becoming a profitable trader. I'm here to help. I'll give you everything I own in my arsenal to make you better, but you have to do your part. And 90% of the traders I work with refuse to do their part, and I can't figure out why. So that's my first hour. My first hour is the same hour every hour. Guys, my smalls are not above my large. I'm in an uptrend. I don't have momentum, which means I don't have anything pushing the market. It's no surprise that it blew right through a mid-band, way beyond where the market should go. And if you tried to take a no momentum trend trade up, you lost. That's an avoidable loss. That's a trade you don't have to be in. You don't have the advantages. Now here we have momentum, and we have a clear path, and it just pulled back to the area just below the mid-band, inside of triggers, and that may find its way to the promised land, right? ES has been doing what all morning? Not giving rules met, peep? It's crazy, isn't it? And guys, I'm telling you, you will get to a point, if you learn, and this is such a big piece, If you learn how to take the best trades, if you learn where the edge comes from, guys, you're going to be absolutely floored at how patient you become, how you don't want to jump into a market that isn't giving you what you need. You need to start using screencasts so you can annotate after taking the picture. Do you have screencasts, Victor? This is fine. I don't mind your annotations if you don't mind your annotations. You give me everything, and I appreciate it. Do what you're comfortable with, guys. But that's it. That's my first hour. I'll leave you with crude oil. We'll see what it does. If that's momentum and path, that's a pullback to the area inside of triggers. Dag nabbit. I did not put in my stops and losses. So guys, I'm going to put buy stop limit 2. Oh, it needs to be a sell limit. So I'm going to put in sell limit 2, 4 to 5 ticks above the triggers. I'm going to put in, we sold, so buy limit 2. Whoops. Guys, that's your trend trade. Sorry, I didn't put in, here, watch this. I'll just close it out and we'll re-enter. And now we've got targets. We've got stops. And guys, that's your pattern. Does everybody see it? First, it's momentum. We haven't reached the fib. The market pulled right back to the mid-band inside of triggers. My stop is where the market shouldn't go. In the KISS plan that I gave you, it says, if you take this entry, do nothing. If it gives you a reversal bar, we'll reduce risk 2 ticks above. If it hits your first target, we'll go break even. Targets are predefined at $100 and $200. Does everybody see that there's a big ugly blue fib above my second target? Why not get paid at the area that could stop the market? And guys, we're in a holding pattern. It's either going to go up or down. But that's my entry. And even before that large sharp bar is done forming, watch that. The circle ends up right at the top of the tail. Now, if this trade fails, that may become a big reversal bar. It may hit my stop. I'm not in control of that. Does that make sense, everybody? That's your entry. First, it's momentum, room to trouble, pull back to the area inside of triggers, and now I'm waiting for a reversal bar so I can reduce my risk. Yep, cool. That's your high probability trend trade, guys. I'll be back in 5 minutes. You guys can watch it, see what happens. When I come back, we're going to click on all the charts that are posted. We're going to talk about the annotations. We're going to look at what you guys have been doing. And then when we get through those, guys, we're just going to watch the live market. And if the rules are met to take a trade, we'll actually ride the trade out. We will go from start to finish, seeing what happens. So go stretch your legs. I'll be back in 5. Here, sorry that took a minute. Oh, look at that. Your trend trade won. Good job, everybody. I was getting some good news for you guys, so I thought I would take an extra second. Before we get into chart reads, oh, it's not even on the website. So Savannah just gave me a little heads up, and she says, "Hey, Mark, do me a favor. I love your class." And they can use a coupon. And guys, I'm going to type it in the room for you. Winner 100. Winner 100, guys. If you are using the prop firm, it is a free $100,000 evaluation. It is a free $100,000 evaluation, $3,300 drawdown, $5,500 profit target. You have 60 days to pass it. So get on it, guys. If you are using TradingView, get it. Get it, get it, get it. Why wouldn't you? It's a free $100,000 evaluation. So if you're still learning TradingView, get it. And guys, you want to know how to pass it? That's a good start. So knock that out. Yay! I know everybody's excited. Thank you for posting all of your excitement in the room. I'm going to scroll up and I'm going to start clicking on the pictures that were posted, ladies and gentlemen. We're going to go through and we're going to talk about everything posted. And guys, remember, I'm not the trade police. I've never wanted to be the trade police. I never will want to be the trade police. What I'm going to do is we're going to talk about what you saw, what you did, how you annotated your charts. And if there's anything I can do to help you do it better, my promise is that I will. And I'm going to remind you, if you're not annotating your chart, guys, it makes it a little more difficult for me to help you out because I don't know what you see. I don't know what you're thinking. I don't know why you did what you did. So if there's something that's an easy fix, I don't always know where to start. So if you're in the habit of not telling me, and here's another good example, guys, if you're in the habit of not telling me, you're not going to enjoy my commentary as much as you possibly could. Well, Mark, I don't want to. I don't want to take the time to annotate the chart. Well, tough. Pete, triggers down, strong side of the triggers, and you get in at 66.82, I guess is what you said, 66.82.50, which means that you're trading directly into zones, you're trading directly into the bottom of the zones, and you're hoping momentum pushes it, and it did. Congratulations. That's a big trade. That's a big trade. It's my job in the room to say, Pete, when you trade directly into a zone, there's a good chance it creates a bounce. I'm not telling Pete not to do it. I'm just saying, and I'm asking Pete, did you recognize? And Pete says, yeah, I did recognize. Itchy trigger finger. Thanks, Mark. I know that my better entry comes from down here. This one, I just got so excited with all that momentum. That's your right. Good job, Pete. I like the trade. Market reversed out of nowhere. It did and then it didn't, right? So it reversed out of nowhere, and then when it pulled back to resistance, then it started pushing down. I love that look. First entry, Pete. Did you see the gap theory there? So guys, there's this idea, and this is a good example of it. If price reaches the mid-band and those large triggers remain a full bar away, what happens is price tends to suck back to those large triggers. It's one of the ways that we find these amazing entries on the small chart. And Pete, you said you just jumped in. Now jumping in with momentum and path, guys, that works for a lot of you. But what you're jumping in against is a termination condition. And what you're jumping in against is it's coming directly from a fib, directly from a 1-to-1. It's turned your small triggers up against you, and it's likely to close all the way up to where it closed. Guys, this would be a tough look to win. And Pete, you sit through the retracement and you make a couple ticks on the way down. And I'm always happy when you guys win. But guys, this is one of those things, especially from a bad top, where that gap theory is more likely to close the gap. And if you get in before it does, you're just going to get run over more often than not. Sorry, guys. But then everything turns, the momentum is there, 3 triggers through, and Pete takes the perfect trend trade and makes money. And not a dumb trade. I don't like to call them dumb trades. I like to think of any time I start to forfeit advantages, it just becomes having the discussion. And Pete, you've heard every discussion that could ever be presented in this room. Guys, when you have the discussion, you're more likely to not do the same thing again. And Pete says, I didn't see the gap. It's obvious now, right, Pete, when you're not looking for a trade. This is why annotation is huge, guys. And one of the things that can be done, and this is up to you to do it, I can't do it for you, is, Pete, if you're keeping a spreadsheet, if you are really tracking your trades and you're annotating them, miss the gap theory would have been easier with a reversal bar off the fib synthetic, right? And what Pete's doing, and Pete, I'm just pretending to be you, not accepting that it was just a winner, but rather saying, how do I do it better next time? How do I recognize this next time? Would have made a lot more money, right? Actually, not a lot. It was about the same entry. But you didn't have to lose 5 hairs and go gray. And now you've got your stop in place. And guys, even winners can be done better sometimes. Even winners can have less risk. And sometimes in the heat of battle, you just don't see stuff. And I've done it. And I've said, oh my gosh, this is the perfect trade. And then I go back after the trade and I study it. And I want to see where my analysis may have been mistaken, right? And Pete, it looks like you might be missing fibs over here. Because this had a fib right at 1508, but I don't see it over here. You may want to refresh your data. And then the next trend trade is just effortless, perfect. Momentum is up. Let's see where you get in. You're in at 40, which means you're in right here. All the momentum directly into a fib. And again, Pete, your fibs don't appear to be going from side to side. Large chart, small chart, you may want to check in on that. Just run it through, whatever. So all the momentum, none of the clear path. Pete, you take the entry with the reversal bar. and it pulls back to the midband one more time just to mess with you. So great entries create manageable trades, right? In a tick above the midband gives more profit. In above the midband gives less risk. And then out at the first sign of trouble, and you get back in because everything's going up, and then back to trouble. And that big fib right there could have messed up your good time, without a doubt. I like the confirmation. Nicely done, Pete. I had a good lesson on this one, guys. 15 minutes up, long. Weak side, not a clear path. And you have to make the choice whether or not you're willing to trade with that clear path. And Paul says, you know what? Even without a clear path, I'm going to take a shot. I'm going to take a shot with everything going up. But I don't have the momentum to push it. I don't have a clear path. And then when you get the up bar, it doesn't actually finish above the triggers. And this is the one thing. So even if you were going to take a shot, that's the first bar that closes above. And that one gave you a little wiggle room for management. This one didn't really give you any because it hadn't beaten the small triggers. It hadn't won its fight yet. And then you do get back in, and there's just nowhere to go. Just nowhere to go. And it all starts with room on the big chart, guys. Um, the S&P trades like $174 million a day is exchanged. Um, NASDAQ has to be more than that. There's always another opportunity, guys. There's always another trade coming, is the one thing that I have found to be true. Wayne, I love this. Strong bottom. And from a weak top, there's that pattern again, right? First it closes to the triggers, comes back and retests support. The triggers don't break. And Wayne says, well, from a weak top, when this holds, when things roll, and I have all of this momentum, he goes, I'm going to find a way. And what he does is he buys the pullback to the small triggers from a termination condition. And it looks like that pullback right towards the mid band, right inside of the large triggers, even when the synthetics don't support the trade. And Wayne has done a lot of study, guys, and Wayne has put a lot of stuff in my room. And I know that he knows what he's looking at. But what Wayne took there is, and I like pulling these pictures out, it's the same thing Nexgen started teaching in 2004. If a Fibonacci area holds and the small triggers roll from that chart, you can sell a pullback, buy a pullback to those triggers. So Fibonacci holds, small triggers roll, and Wayne bought a pullback right to those triggers. And when it started railing up, he said, oh my gosh, add contracts. Let's make money. And he gets paid on the way to trouble, and then he gets paid just above trouble. And Wayne, that's awesome. And he says one and done, guys. That was a $970 moment in the morning, and he's done. And he's going to go build hot rods. Wayne, nice job. When I talk about a brand new plan, guys, when I talk about a plan for new users, we are literally talking about like one trade out of a million ways to use the software. He says thanks, right on. And the longer you spend with the software, the more you begin to recognize. The more you focus on advantages, the more you begin to recognize. The sooner you recognize that there's absolutely no shorts on the table, your brain begins to shift to look for opportunities the other way. And if you don't have that really solid foundation laid, guys, it gets harder to find the next trades. Miss Jen, weak side of the triggers, odds favorable momentum against you. And this is that pattern that we started studying, that we're starting to talk about, guys. If you are on the weak side of the triggers on your trading view chart, the likelihood of you beating the strongest trigger look ever against you is pretty slim. You will every now and then, but when the triggers start to roll a little bit, when that momentum subsides, it's easier. And Jen, you took the first one and it just ran you right over, right? And then you took the second one, but it really didn't have anywhere to go. So thank goodness you were able to hop in and make $60 a contract. Revenge trade. F that market. But guys, this is one of the patterns and one of the things that I've begun to recognize, and there's not a rule for it. It's not anything that you'll find in the literature. Only if you're building a hot rod for me, Wayne. It's not in the literature. Wayne, you gotta fix your triggers. Odds favorable, nothing in the way, pull back to the area inside of triggers, get paid. Wayne, this is generic, vanilla, high probability trend trade you could ever get. What a beautiful trade. Nicely done. Go build something fast. And enjoy your day, man. Thank you for posting. It's always good to see you in here. So guys, this is one of the pictures that I've been making, and I'm starting to recognize this as just a patience piece for me, and I'm just going to share it with you because I like you guys. And if I were going to annotate my thought process, when I am on the weak side of small triggers, I know the market does not have strong momentum. And guys, if you don't know that, well, then this becomes a little more difficult. But that's the first part. So the second part is, if my small chart is strong against my trade, I will let the small triggers roll up before looking for an entry. I'll take something, right? Just something to give me a little more of an advantage so that the fight isn't crazy. And Jen, it's okay. And this is the second time today. Looking back, we typically see the issue, guys. And if you don't go back and look at your charts, if you don't go back and study what you did after a trade to see if there was something that you missed, guys, you're missing the most important part of study. And if you post in the room and you tell me what you're looking at, I may have something for you, right? I might have a little something that's helpful, and I like to be helpful. But this is something that I'm beginning to see more often. So maybe it's going to work its way into the rules. And then when you get to the strong side of down triggers, Jen jumping in right in the middle of the zone, right? Calling it a momentum trade off the higher zone with odds favorable strong side room. Since this zone didn't break, Jen, I love that you let it pull back to the other one. This one's not quite broken. I'll let it hit that zone, and you caught it on the way down. I can recognize that. You get paid 7 points on the way down. And then your protection is interesting. You put your second target 3 points into your trade, guaranteeing $60, because momentum doesn't always last. So you get in, you get paid quick on the quick burst, and then you refuse to lose. And I love that, guys. There's a reason to exit, and that one was logical. Close above the small triggers, it's not really the momentum anymore. And you've already been paid, guys. And when you've already been paid, it's easier to manage. All right, trend trade down. Triggers down, price on the strong side of the triggers, clear skies to the next trouble area on the large chart. Small chart, price closed on the correct side of the triggers, but the entry was late. Should have entered 2 bars prior. On this one, it would have given you room to the outer band, Victor. And this entry happens to be directly into the outer band, which is right where things stop and bounce very often. And they got you for it. They got you for it. Right into trouble. And then back into trouble. And Brandon, you didn't get my lecture on annotation when you posted this. But I am going to repeat, guys. If you're not annotating your charts, I don't know what you did. So do me a favor. Draw an arrow. And tell me that you see strong triggers, guys. And then draw an arrow. And Brandon, this is where you're going to get the best feedback from me. Because price reached 1-to-1s. Triggers not through. There's one trigger through, one trigger line through. This is a termination. Rule 2 says no trade. And what I'm curious when I see these charts is, did you know that you were trading into a termination condition, right? No, Brandon, you're not that guy. I'm that guy. That's why I recognize it. And I don't do this to say, damn it, Brandon, why did you trade into a termination? This is where I want to know. Brandon, I want you to say, Mark, I see the termination, right? And then I want you to come over here and say something clever. Like, because of momentum, clearly defined entry, I choose to enter and manage assertively. Right? So if you say this, what it tells me is that I know where great entries come from. I know that it's not perfect. I made a point of getting paid. Does that make sense, Brandon? And everybody in the room, really. And I'm not beating you up, and I posted it earlier, man. This is great management on a lower probability trade, or at least medium probability, because when you know what you're up against, it helps you with management. So I ask you guys to do this not because I don't have any idea what you're doing. I do. I know exactly what you're doing because I've done it. I want to know that you know what you're looking at. I want to know that you know that you purposely and with intent waived your right to a clear path and then chose to manage it assertively because you had so much freaking momentum on every chart. And honestly, there's a lot of you guys that'll do this. And if this is your trade, I may point out as well, that divergence is killing a little momentum and you already don't have a clear path. Be aware, be solid. And I love your exits. So good stuff, man. And when you go back and look at this picture tomorrow, and guys, and I've said this a couple times, if you go back and study what you do today, tomorrow morning, and you look at what's great and you look at what doesn't work, man, it just sets you up. It gets you focused. And if you take the time to annotate, I traded into a termination condition. And I know this lesson because, guys, this was my lesson. I must have typed out 100 times, traded into a termination condition, lost the trade, before I stopped trading into termination conditions. So great stuff, Brandon. And thank you for being a good sport when I talk about annotation. Some people don't appreciate it. You don't even have to appreciate it. I'm going to do it anyway. But I do it for a reason, guys. I will always say stuff, but I will give the whys. Boaz, all the momentum, 3 triggers through. Beautiful pullback directly to an area inside of triggers. You waited for the up bar because the small triggers were close, and you took it all the way to trouble. What a beautiful trade, Boaz. Guys, this is the perfect medium probability trade. The area only had the potential to break, and Boaz, no divergence, strong triggers, giving yourself that advantage, not forfeiting momentum when you're relying on momentum to break areas. Really nicely done there. Boaz is another one of my really boring traders. He takes the same trades every time. Consistency, guys. The most successful traders you meet will take the same trades over and over. They hate deviation from a plan. All right. Andy V. Triggers are up. Strong side. Room to trouble. You just jump in. 52,750, which means that you jump in directly into trouble. 100% no clear path on the small chart, and you are able to make, you're in at 70. Is this silver? I don't know what market this is. You make 0.01, which I believe is $100. $50 per lot. No, move stop loss first when moving to profit target. Bar printed so fast it hit profit target when moving to 0.01 tick, 50 per lot. $100 trade. You were moving a profit target and it got you right on. And the only thing that I ask is, did you realize that you were trading directly into trouble? And if you did, and I want to go on, I want to expand on this, guys, because I'm not the trade police. Andy V paid attention in the room. And strong side, well, up is just a direction, right, Andy? Up is not a reference of strength. But strong side of the smalls is very much a reference of strength. And 1 minute areas are most likely to break with this look. So what I hope and what I want you guys to do, the correlation, is that if you're not going to give yourself any room on the small chart, I hope you're embracing that strong side on the large chart. Does that make sense? Because if you're on the weak side, that area is more likely to bounce. Even from the transition side, that area is less likely to just break for you. So great job using strong side of the triggers. And I know that I said up isn't a reference of strength, guys. I do believe language is important. And the more specific you are on what's giving you advantages, you'll find that the more likely you are to embrace those advantages. 15 minutes are up. Strong side. Clear path. There's your pullback. There's your first up bar that closes above, but it's into trouble. There's the next one that closes above, and Paul, you take it. You put your stop below the pivot low, and because of the strong side of the triggers, because of the beautiful entry, because you didn't trade directly into something, you took it off to profits. Great trade, Paul. Guys, that's your trend trade right there. Notice that he didn't trade into trouble. Paul said, not my money. That could mess something up, and look at the bounce it created. And then it breaks above, and then it closes above, and then there's room to trouble. And Paul says, wait a minute, I can't go break even yet. I got to hide behind something. I got to get behind the area that's most likely to hold. Great job, Paul. Great job. Oh, and Wayne, we saw that one because you were on your way out. All right. Termination. Well, it's a pivot stop out that had the potential to break. You're welcome. Small triggers roll. So we've got strength down on the small chart. Can't even see what's happening on the large chart. There's no reference whatsoever. Range chart has momentum. You get in at 42.25. I'm not sure what made you get in at 42.25. Have no idea. 42.25 is on the wrong side of the triggers without momentum, right off of a mid band. So does everybody see how this is difficult for me to give feedback on? And I won't even say whose chart it is because that doesn't matter. But I see no momentum, right? I can't see anything here. There's just, it may as well be blacked out. It's somewhere in the rearview mirror. I see trading with synthetics up. I see coming from a mid-band with divergence. No areas for entry. I'd love to know what prompted the short. And I do. I see a short, guys, without a doubt. But I want to know that you saw the short. And this is a very difficult chart. And I'm just going to let you guys know that want to move forward. Without annotation, if I can't even see an entry chart, if I don't know that you saw the challenges, and if it's not a clear entry, I just have to say, hey, nice job. You're up $750 for $10. Is this repeatable? Is this a pattern that wins more than it loses? Is this the advantage? How did you manage your stops? What made you choose your target? And guys, if you give me that information, my promise to you is that I'll give you everything that I have to help you become a better trader. But you have to do your part, and that's your part. Triggers down, price on the strong side. Looks like there's a clear path. All the momentum, and you just jump the fudge in when it gets below trouble, and you get out at trouble. Exit when that HVA printed. Pete, that HVA was there for an hour, for 30 minutes. I like exit at trouble. Get the hell out. You know where the market can bounce. GTFO, baby, get paid. Nice trade, Pete. Termination. Strong triggers. Just momentum-based jump-in trade all the way down to trouble. The previous chart that I had no idea what was going on, there it is right there. There's the pullback to the mid-band. I'm assuming that's the entry right at 42.25. But 42.25 is even on the wrong side of all the triggers, which makes the confusion even more on my part. Great trade, Pete. And then holding it until it gave you a sign of weakness. Nicely done. You guys are awesome. All right. Triggers down. but a termination. Triggers down, trend down, triggers down, trend down, smalls down, large down, synthetics down. Go long. Go long. I love it. You made 3 points. You clearly have a plan. You clearly have a plan, Brandon. I'd love it if you let me in on it. And I would be very willing to help hold you accountable to it, to tell you if I see something different. I like it, guys. This is terminations. This is weak triggers. This is pivot stop out. This is, what else? Smalls get above the large. Large are starting to turn. Everything's above the fib. Let's see if that termination condition holds and pushes. And it did. It did exactly that. Everything about this trade is absolutely gorgeous. I just wish you'd tell me if you saw what I saw. Or if you just said, hey, look, blue line, sure hope it holds, right? I don't know. I don't know. All right, done beating the dead horse. Tried to put both trades on the screen, and you could not. First trade was $350 or $305 gain. All rules met. I'm going to take your word on it, Victor. Second trade, triggers up. Price in transition. Clear skies to the next trouble area. Small chart. Entered late. So you entered at 90, which gives you very little room to trouble. That's okay. Have done that several times now to avoid trouble, but still enter with more trouble on the way. Still came in above trouble. Well, you entered above this trouble, a little bit of room to that trouble, and you do have strong triggers. Very nice. Didn't even set the second profit target, just let it roll to the next trouble area from transition right to the pink 1-to-1s. Nicely done. Nicely done. Didn't trade into the 1-to-1s, didn't trade into the zone. Let it get above and gave yourself a fighting chance to get paid. Nicely done, Victor. I'm telling you guys, a little bit of breathing room goes a long way. Lots of work to get a trend going. Yeah, they're just running sideways, right? These guys are under no obligations to create a trend for us if they don't want to. And then Wayne, we saw that one. Good stuff. Good stuff. Boaz, Pete. And then Victor again. Let's see what we have. Get rid of that. Get rid of that. Man. Weak triggers. So Boaz, when you tell me you have momentum, is it okay if I respectfully disagree? So guys, in an uptrend, this is momentum. Strong triggers, separation, open scissors, gap between the two, that's momentum. This is anything can happen. 30 bars, all right. So strong trending market, 30 bars without a reversal bar. Strong trending market. Thanks, Boaz. All the triggers are above trouble. So we'll call it momentum in a path. Market pulls back to the area inside of triggers. You wait for the confirmation bar. You wait for it to go in the direction. And sure enough, it does, and it goes. No diversion, entry up. No need, very fast. I mean, we're expecting the fib to hold, right, Boaz? With everything up, strong trending market, perfect clearing of trouble. You're saying, man, I hope the fib holds. You can wait for confirmation, without a doubt. That's your right. Getting in at the area inside of triggers, because isn't that the perfect recipe? Let me do this real quick. So if we know through study, through simulation, through class feedback, that the absolute perfect trade, the best of the best, the highest probability, 32 flavors of sexy, guys, starts with momentum. And in a strong trending market, he has it. And then we couple it with a clear path, and with 4 triggers above, he has it. And defining the perfect entry at an area inside of triggers, he has it. So Boaz, one of the questions, and everybody in the room, you're going to ask yourself this question. Uh-oh. Come on, snag it. There we go. And this is one of those things when you know what's working for you, what's working against you. If every indicator on every chart agrees with my rules for the trade, do I really need a confirmation bar to feel good about its chances of winning? And this is one of those questions that you'll begin to ask yourself. And on Ninja Trader, Boaz, see how far away those small triggers are? That's even more of an advantage to get in at the area. So this is part of trading, guys. And there's nothing wrong with waiting for a reversal bar. And it actually came back down, and then it goes back up. And then it comes back and gets you one more time. So I'm not telling you don't wait. That's not my job. I don't tell you guys when to enter or exit. It's educational, CFTC thing. But I will say, if every indicator on every chart agrees with the rules for the trade, it's hard to find a better look than that. It really is. And I'm so willing to get in at an area. Maybe you will be too one day. Sometimes a 50-50 pullback to the mid-band with divergence will work. More often it does not. It'll blow through that mid-band. I agree. Weak top, barely 2 triggers through. And here's one of the things that so on the KISS plan that I give you guys, it actually says one area not broken. So if you go to the plan that optimizes your chances of success, I like how I work that phrase in there. It says 3 or 4 triggers through, one area not broken. That's the best of the best look. When you start getting into only 2 triggers through, you know you're losing a little bit of the good stuff. And if you have 1, 2, 3, 4, 5 areas that you're hoping momentum breaks with only 2 triggers through, once again, it becomes a little bit harder to believe that area is going to actually break. And when it's not coming from a strong top, it's even harder to believe that that area is going to break. And when your small chart says, hey, we're losing momentum, it's even less likely to break. And it says, hey, we're losing it again, and we couldn't even push as low as the last time. Guys, I mean, kiss of death. And it all stems back to core advantages, momentum and path. And Pete does a great job. Pete's been with us over 10 years, and Pete recognizes these subtleties that newer users won't recognize, guys. And that's one of the reasons that when I hand out the KISS plan, when I talk about the best of the best, I am just adamant about letting you know that this is your first trade. This is your highest probability trade. This is your best trade. This isn't your only trade. This is the trade that teaches you to read your indicators so that you can make good decisions and begin to recognize when advantages are gone and when hope is where you're going. And yeah, Victor, we saw that one. Remember, guys, I go in order, always. And look what crude oil's done since that beautiful trend trade. It has absolutely stuck right at Fibonacci support, and it hasn't done anything, guys, for nearly an hour. It reached that fib at 10:10. It is 10:54, and it just hasn't done anything. The sellers are trying. The buyers keep telling them no. There's just nothing to do there. All right, there was strong triggers. There was my clear path. There was my pullback to the area inside of triggers. And if you entered at 42, it made it all the way down to 34 at least. That's a huge trade, guys. That's a huge trade, and it is freaking perfect. And if you're an S&P trader and you talked yourself out of that trade for some reason, I want to know why. Because that was gorgeous. And then when it comes down and you still have momentum and you still have a clear path, and there's your tail. The first pullback to the area inside of triggers tries to push down. The second pullback to the area inside of triggers tries to push down. Here's the second higher divergence. There's your first warning. The third pullback to the area inside of triggers tries to push down, at which point the market provides a third divergence in the same price range. And guys, the only termination condition, the only reason to not take a high probability trend trade, the only reason to really exit your high probability trend trade is because your advantage is gone, guys. And three divergences in the same price range is a textbook termination condition. Whoops. And it is the only termination condition that I will accept on a smaller, faster chart. Because when you get three losses of momentum, was that the one? When you get three losses of momentum, guys, I want you to see exactly what it looks like if we blow it up. This bar still had momentum. This bar still had clear path. And we'll do 2 bars, I guess, because that's where the trades originated. This is your small chart showing you the change that your large chart can't show you because it's so big and slow. This is the only termination condition on a small chart. Does that make sense? So guys, this will become a management tool for you as you grow with the software. And if you're using the automated system, guys, and you're taking those amazing high probability entries on the automated system, learning some small chart management is going to pay huge dividends. Huge dividends. All right, so don't have momentum. Path is clear, trend is up, triggers are down. Hell, I don't know what it's going to do. I can't come close to getting a rule met. Still can't break through the termination. There's those three divergences again. I don't have any idea what's going to happen. My rules aren't met. I choose not to trade. I can look without even doing the first 2 parts. I don't have any room to trouble. And look how often trouble is stopping that market. And look at a sideways, do nothing, don't waste your market that the 1 minute chart is. Show me a picture of your chart, Aaron. There's a couple things that could do that. Can you show me a picture? Are you comfortable doing that? You should be. You have a green check next to your name. It's easier for me, guys, because I'm real visual. I'm very, very visual. So this is it right here. Do you see how it's only 750 where you are? And I get it. It's only 750 where I am, Aaron. When your software creates Fibonacci, what it does, and this is a good lesson for everybody, just because I think it's neat how it happens. So when your software figures out fibs, Aaron, it doesn't just do it in the moment. It's not a one-day affair. It literally goes back 10 days. And it takes every calculation over the course of 10 days, starting at midnight. So if your chart and my chart are a different time frame, your software ran calculations for 3 hours, not only on the large chart, but also a small chart, and even higher chart. And it took every one of those calculations and it put it into making fibs for my particular chart. The fibs don't come from like some fib farm. They're literally reflections of what your chart has done. So what happens is if you and I are in a different time zone, we're likely to have different fibs. If you're only 5 days back and I'm 10 days back, we're likely to have different fibs. So if you ever look at my chart and you're like, man, we don't look the same. That's why right there, Aaron, if it's important to you, because some people have that little mental hitch where if my chart doesn't look like your chart, it's challenging for you mentally. Maybe you have a little OCD like I may allegedly have. Um, you can change your time frame to Eastern, and then we're more likely to line up. But that's why they're different. Does that make sense? Nothing happened. It's just a time frame difference. I had an extra 3 hours. I don't know if it's best, Brian. For me personally, I want to be. I don't know. John Novak is sitting in Sarasota, Florida. Um, and I grew up learning from him, and his charts were in Eastern, so I wanted to be in Eastern with him, because I wanted my chart. I wanted to see on my charts what he saw on his charts, and that was the way to do it. Was to get into that Eastern time zone. If you're cool with it, I mean, trade your charts, right? That one sure seemed to work. But if the fib wasn't there, Aaron, you still had three divergences telling you that the market was more likely to go up than down at this point. So both charts told you no more shorts. But if you want to be in line with me, you'll need to bump over to Eastern time frame. Great question, guys. And I like it because it's a little lesson on how fibs are built. It's amazing, guys. Your software like goes through every pivot on this chart for 10 days. And then when it's done doing that, it goes through every pivot on this chart for 10 days. And then it begins to create higher time frames, and it projects forward and it goes backwards. And guys, it's freaking brilliant. And from tens of thousands of calculations, you get fibs. And these fibs will show you where the top could be. And it'll show you where the bottom is more likely to be. And it's pretty awesome. It's funny because John Novak still giggles like a schoolgirl when the fibs hold the way they do, and it's neat. No, it's just a time frame thing. But the three divergences was your red flag since you don't have the fib, Aaron. And let me tell you, man, people have been trading successfully from different time zones for as long as Nexgen has been a thing. So just remember, trade your charts. But that conversation just got you that three divergence rule, right? Because your chart was awesome. Your chart was momentum, and your chart was path, and there was no reason on your chart to believe for a second that market wasn't more likely to go down than up, except for the fact that it was only three triggers through an area that hadn't broken yet, and you could visually see the losses of momentum on this smaller chart. Good stuff, man. Thank you for posting that. Guys, post everything. If you ever wonder, just post. Large chart in an uptrend. All right. So I'm going to go through the Nexgen read. So it is up, right? And I like that you recognize that even though the background's red. But check it out, guys. Get in the habit. Like, force yourself to say into tight. Maybe in the call out box. Triggers up. An uptrend doesn't define strength, right? So where's price trading? You are in at 30. So transition side, tons of room. That's the large chart read. And look at this. Longed after the correct side of the triggers, and it came back to get you. So let's talk about your entry. Room to targets. So you get in at 30. So you get in above trouble. I love it. You get the close above. You wait for 30, which is awesome. And that market goes up $360 per contract, Pablo. It went from 30 to 48. And then you held it all the way down to 04. And that's a big hold when you were up so much money, right? You had room to trouble, but where were you on the large chart? Were you strong side? Yep. You were strong side. You had room to trouble. It looks like it eventually went, didn't it? Or did you get in after it had already been to trouble and was flying down? Had this red bar already been to the outer bands for the second time? Which is okay, right? It's a good read. Up, strong side, room back to the thing that already created a bounce. Perfect entry. Um, if I'm up, and this is just for me, right? Having room to trouble doesn't mean staying exposed. If I have $1,000 worth of room, this is management. Your entry's perfect. If I have $1,000 worth of room to trouble, do I need to keep $500 worth of risk per contract on my trade after I've already been up $720? So you were up $720 in this trade on a 2 lot, right? You only had one contract, so you were up $360. That's cool. Um, so for me, and then Pablo, this is just me. If I'm up $360 in a trade, there is no effing way I'm going to give back $360. Yeah, that's usually how it works, right? So if you want to hold, is there any reason you can't go to break even, right? There's nothing in the way. It's already been there. You can always re-enter. One of the things about management is you've got to be willing to, like, holding for the big moves is awesome. It really is. Holding for the big moves is awesome, but protecting your investment is also awesome. So when you got in, and I love your entry, dude. Your entry is solid. When I'm all the way up here at 48, there's just no way. There's no way I'm giving any of it back. It's too far into the trade, guys. It's too deep. And if it comes all the way back, I'd rather get out, break even, and take another entry. Does that make sense, Pablo? And this is the management side. But Pablo, when you're taking these amazing entries, when you have the right entry, management begins to fall into place. Things that I notice on this chart, and this goes into nuance, guys. If you're brand new, especially if you're on simulator, take every entry. Learn your entries. The market had already been to the outer band twice. It had already been twice. And it was literally coming back from the outer band. And when you entered, it was screaming down. You still took the perfect entry. But these two things get my ears pricking a little bit. They get my eyes thinking, uh-oh, maybe not. Maybe not. I don't want to hold. And even if you don't go break even, I would say at that point, I'm hiding behind the zone. It's already broken above it. It's already given me another up bar above it. If I'm going to leave risk on the trade, I'm going to force them to get back below this zone. Does that make sense? So maybe we can work a little better management, but the entry is perfect. And I can't stress that enough. The entry is 100% in line with the rules, and then management opportunities present themselves. And I think in the moment, and I'm sorry that I'm harping on your chart so long, Pablo, I think in the moment we get so excited about being in the trade that we forget that if things go wrong, there might be another trade. There may be another long from lower down. And it's okay to get paid, get out, make money, right? And you're always going to find the next trade. It's like buses. Buses always show up. Jen liked the trade, right? Took the exact same entry. There's your pullback. There's the bar that breaks above. Same entry, Pablo. Yours actually was a lot better. She was in at 38. Or were you in at 28? In at 28, just above the zone. And you were out at 36, Jen. It's the exact same trade. Same bar, same entry. You were in, it went up. What got you out? What made you take, what did you see that made you take the points? Is that 38 or is that 28? Did you enter at 38? Okay, so 28. You took one at 48, predefined. And then the second one gets you break even. So one at 48, which is a $400 per contract. And at that point, you took all the risk off the trade. Very nice. It's perfect. And it's harder to do that with one contract, right? Because with one contract, if you're out and it runs, it runs. You have the stop loss at the zone. I think it's interesting, Jen, that you put your stop loss above the zone for a long trade, and you did it below the zone for a short trade too. Isn't the zone where it's most likely to bounce if it's going to continue up? It feels like putting your stop at the area inside of favorable large triggers. Well, if you're really hoping that it continues, where shouldn't the market go? So watch this. Let's use that language. So check it out. I take the long. The market's going up. Let's put a little girth on that bad boy. It's already broken above. That's what gives me my entry. I've already got a second bar above. That's confirming that that breakout is pretty rock solid. This zone is where I insisted that they broke out of. And the language that probably rattles around in my head, Jen, and maybe it rattles around in yours, is I won't enter into or below the zone because it could stop the market, stoop the market. So if that zone that was resistance breaks, and it broke, it's support now. If I put a stop where the market should not go, it has to be below the support that I hope holds. Does that make sense? I like typing it out because when I type it out, it sticks for me. So all I'm saying is that it's already broken. Everything's good. That's why I was patient. And if they can push back through that zone that they already broke above, maybe that's where I'm willing to hold. Maybe that's where I'm willing to get out. And it means leaving a little bit of risk on a trade, right? And if you're not comfortable with that, break even all day. Guys, there's nothing wrong with break even trades. Because if they get from your entry all the way out here and then come back to it, get out break even. If you get another bar, re-enter if that's your thing. But right here, you're just chumming the water completely. You're welcome. Thanks for posting in my room so that we could give a lesson to everybody. Management's is where money is made. Strong top, triggers rolled, strong triggers. And Pete, I love how you do this. You love to point over here when your trade was over here. Right into a fib, one divergence. I mean, I'm not sure why. There was still a fib there. Directly into a fib. Area likely to stop the market. And then you held it even after divergence and added contracts into an area that already said it was probably going to stop the market. And then you held it and you added contracts. into a trade that was in the process of failing. And you got lucky. And I will hold on to that contention until my dying day. You dodged a bullet. The sun shined on you. Would have been easier to just enter 6 right there with a clear path. Get out right where you entered the last one. I mean, that was the perfect trade, wasn't it? That was momentum and path. Perfect entry, low risk, tons of room to trouble. I know, we talked about it earlier. Guys, only you're in charge, whether you want to take that trade or not. And Pete, I'm not telling you don't trade in determination conditions. And I'm not telling you don't ignore warning signs. And I'm not telling you don't keep adding on to positions that are giving the indication that they're failing right in front of you, right? That's not my job. My job is to say, hey, thanks for posting in the room. Everything I just said is exactly what I saw. Is this your best chance of success? Can you guys hear me okay? Is it just Rat? All right. He may need to reboot. And guys, again, Pete, you get to do whatever you do. And when you're up that much money, you can, right? You can pull some stuff every now and then. Aaron, sadly, just totally missed that upward trade. Is it safe to enter whenever the market is doing multiple divergences like that? I just can't tell yet what our great interest is or not. You're guessing too much. Do you want to take the guesswork out, Aaron? Do you want to be fixed instantly? But it means that you gotta not be in the market every time it moves. What are the best entrances? Whoops. Well, they're defined. When you have strong triggers, when there's nothing in the way, when there's an area inside of triggers, that's your best. Why not learn that one, right? Why not learn how to take the best trade consistently? Learn the rules, learn the looks, because then it opens the door for more. And then from there, it opens the door for more. And Aaron, when you ask, is it okay? It's not my job to say whether or not something is okay. It's not my job to say whether or not there was an opportunity. But I can tell you, with no uncertainty, with no hesitation, that here I had momentum, but I didn't have a clear path. And all the way up, Aaron, I still didn't have momentum or a clear path. And my large triggers are a full bar away, and I wouldn't be surprised at all to watch the market pull all the way back to those large triggers, which are still down. And Aaron, did you really miss something because it went up, or did it just go up without your rules met? That's the question. Just because it went up, does it mean that there was your money somewhere in there? And the reality is that there's not. There isn't. Right? It went up here too, but everything said down. And it went up here, but everything still says down. Guys, everything still says down. Your large triggers are still down. You're trading directly in determination conditions, right? We're starting to see losses of momentum. It could go up, guys. It could. It could go down. You know, there's only 3 things to do in the market: buy, sell, and wait. And if you don't have a clear edge to do the first 2, then the third typically is your best example. Does that make sense, Aaron? There's 2 things that happen in the market. And I don't know if the second one is a real thing or if I made it up. So there's the fear of missing out, right? And this causes investors to make bad decisions, typically poor entries, hoping things happen that aren't going to be there because they can't stand the thought of not being in movement. They can't stand the thought of the market going without them. And let's just type that in. can't stand the thought of the market moving with them not in it. And we've all heard of that, right? The fear of missing out. This is the one that I think is so damaging to new users. And it's the fear of being left out. The FOBLO, I guess. The idea that when the market moves and you're not in it, because maybe you didn't succumb to FOMO, you believe that move was your money that you didn't get. You believe that up was your up. That was your cash. I can't find one rule to be met, but those sons of bitches went up without me, and I didn't get paid, and that's mine. How do I get it? Well, you get it by not having momentum, by trading in determinations, by hoping that three divergences stop the market, and by trading without an edge. And that's your right. Guys, it's always your right to trade without an edge. But the goal of day trading is longevity. The goal of day trading is to continue to trade. Not just today to get the lucky 100, but to continue to trade for the next 10 years, to change your life and the life of your family by being consistent. Momentum, 3 triggers through, not a clear path. Pulls back to the area inside of triggers. As it does, you catch it on the way up. Nice trade, Boaz. Good looking trade. And here's one of the things that I want to point out. Just on that same note, there's no entries from the very bottom, Boaz, until you had your rules met, right? You didn't do anything. You waited. And Aaron, thank you for asking that question, because I think a lot of people need to hear it. Was the wait worth it, Boaz? Was not being in that up move, was it worth it? Because you got in here at 11 and 23, and that's 11. That's over $200 per contract. That's a nice $300 or $400 move over the course of a minute and a half. A minute and a half, guys, of a 9-hour trading day. Over $300. There's not a lot of professions where you can make that level of money sitting in your underwear with the cat in your lap and a plate of Oreos next to you. Nice job. Great job, Boaz. And I think what happens is when you start to believe that the next trade is coming, when you start to believe that you don't have to be in every move, that every tick isn't your tick, guys, it creates such an awesome level of patience. All right, 15-minute up. Strong side, clear path, 1-minute trend trade area, pulls back, gets in, same thing, same trade we saw, and it fails. And then you hold, and it's a big hold. And then there's your next close above that isn't into trouble. And guys, this is, and thank you, Paul, for this. This illustrates, doesn't it? You don't have to keep $1,000 worth of risk on a trade. The next one's coming. The next one is coming. Guys, I am with every one of you 100% on your entries here. I do believe that giving back 26 points is irresponsible from a trading standpoint. Risk is a part of trading, guys. You can minimize it. The next trade is coming. Because not only did this one fail, but it failed again. And it's just, oh, that's a tough look. That's a big loss. That's an $1,100 loss. I could see taking $300 or $400 on this one and being okay with it. But 11, guys, that's a day killer. That's the end of it. Mark, is this an arrow and what does it mean? Jen, yes, it is an arrow. And when you have a breakout bar coming into an area and then it's followed by a reversal bar up, it produces a signal. That's a market flow signal. Now those signals are pretty useless if the rules aren't met, because there's a short one right there, breakout bar down, then the down bar, right? And that's what produces the signal. So we used to use it, Jen. Yeah, we used to use it, and let me show it. I think Boaz's chart has market flow. So we would use it before, Jen. Um, Market's up, pulling back, and you're like, I'm not sure. I don't feel great about it. I don't know that I should actually take this trade. This says it's pretty good. This says it's pretty good, but that divergence has me on edge. Jen, we used to teach you could wait for that market flow signal and use that as confirmation. And it also gives you something to put your stop behind. And that's how Nexgen initially taught the use of market flow. And I used to do it in my 101 class. And of course, this one didn't need it, and it never produced it because the rules are met. But the same way that it can confirm, that was a down bar right there, and everything's set up. So don't get caught up on the arrows, guys. Don't get caught up on the signals, especially on those big slow charts. It's not necessarily a trade entry if the rules aren't met. Pete, termination, momentum. That's the gap theory again, Pete, right? Do you see it? Did you see it this time? Price reaches the mid band. Large triggers are a full bar away. More likely to close that gap back to the triggers than it is to just bounce. You take an awesome entry and you make a little money and get out. Did it close the gap? There it is, baby. Dodging bullets, Pete. Trading into every termination condition, dodging bullets. Guys, I'm not going to tell you not to do it, but I think if you go back, if anyone in this classroom goes back historically and asks themselves truthfully, do I win more than I lose trading into termination conditions? I think 90% of you would say no, especially if you don't have a solid management plan. You guys with a solid management plan, and Pete, I'm gonna knock you down and then lift you up. You guys that know that it's the gap theory, you guys that know you're trading into a termination condition and manage very assertively, it's amazing how you can make something out of nothing. And let me show you what Pete saw here and probably didn't put on there. Strong triggers, and he also has strong triggers on the small chart. He has no divergence on the small chart. He has a mid band and one-to-ones on the small chart. Pete's got a lot of reasons for this area to create a bounce. Pete also knows, I'm hoping, Pete, that you saw it, that it could fail and drop all the way down to here, and he managed assertively. No, Pete, I wouldn't take a short with triggers up on the 15-minute. How's that for an answer? With the triggers up, there's one short, Pete, and it's an HVA trade. And if you didn't catch the HVA trade, you are fighting trend, you are fighting triggers, and until these roll and I get on the strong side, I don't believe those are going to break. I refuse to believe those are going to break with triggers up over here. Does that make sense? There's one counter trend trade that I teach that's in the manual, and it's an HVA trade, and you missed it. It's gone. Well, let's go back to 101, right? Let's go back to TradingView 101. And I know that it just goes right back to the generic answers. But the generic answers typically produce the best results. So Pete, 1 minute areas are most likely to break from the strong side. So if I'm going to take a chance trading into an area, wouldn't it logically make sense that I'm on the strong side of triggers over here? The same way you were on the strong side of triggers over here, and I think it pushed up through. Now that's the basic, Pete. That's the 101. That's the remedial. The hey, I've been doing this for a while, let's talk about it, is Pete, termination, stop the market. Small chart reversed. Odds favorable momentum. Some people will put their eggs in a basket and say, you know what? Because of the termination, because of the reversal, because of odds favorable, I see this, Pete, as one of the trades you take when there's three divergences at a fib and you defy the large chart and go the other way. That's what this is. And again, you could say, until I get a close on the other side of those triggers, I'm going to ride the momentum, right? Because where does the market tend to change direction? When it closes on the other side of the triggers. You just have to be very aware. And what that would be, so there's your HVA trade. And it was perfect. And then at that point, it's just nothing but strong triggers. So initially, it is the immediate momentum supporting shorts from a termination. And you know exactly which areas could create a bounce. And it just doesn't. It doesn't create a bounce or even look to get to the other side until it gets back down to the large chart termination. And you're trading in between zones. Does that help a little bit? You can do whatever you want. If you're fighting the large chart and using small chart momentum, as long as you recognize that you're using immediate strength, not overall advantages, have fun with it. There's a lot of people that make a lot of money taking the shorts to get to the long. Taking the longs, and let me show you. Something like this, where maybe like, oh, here comes my short trade. Hell, I've got strong triggers. I'm going to ride it up to the place where it's most likely to go short, right? Or I'm going to ride it down to the place where it's most likely to go long. That's one of the things that happens as you guys get better reading these indicators. And now we're into a termination, but we are on the strong side. And man, if there's an HVA trade here, it may go all the way up to the next zone. And if you miss the HVA trade and you've got strong triggers, hell, you might be able to ride that all the way up to the next zone. I don't teach people to fight trend. I don't teach people to trade directly into zones. I don't do it. These are choices that you guys will make based on historical studies. So I would encourage you from a strong top or bottom. So let me put a circle on this one. This is how I would make decisions. There's my termination. There's my first sign of strong triggers after the termination. And it gets a pretty good push, Pete. Wouldn't you agree? Once the triggers are strong, it's a pretty solid push. And then it comes back. And then it pushes again. So maybe there's something to coming from a termination condition that produces odds favorable momentum the opposite direction. I don't have a trade for it. I've got an HVA trade. And if you took the HVA trade at the top, it was pretty solid. And now we have the termination. There's your bar, but what I need is this to be an up bar. If this is an up bar, it'll create the high volume area from that breakout bar up. And then if price pulls back to it, that's my first shot at a potential long coming from a termination. And it is counter trend. It's called an HVA trade. So we've got 17 seconds. If this bar closes higher, we're going to see a green line print. 2, 1, boom. Well, maybe it didn't because it was another breakout bar. But we're watching that change come, so we can come back and revisit it and see what it does. There we go. Did it there, right? There's your termination. There's your breakout bar. There's your higher close. There's your HVA line. So if you got a pullback to this HVA line, that's your HVA trade. Let me get that off. But what's the problem with it? It's directly into a VWAP. It's directly into one-to-ones, right? So, well, it got me in and I got right back out. That is the spot where the market is most likely to continue up if this termination is going to reverse the trend. It has absolutely nowhere to go. Has absolutely nowhere to go. Do you really want that trade? Large triggers are still down. Do you really want that trade? But that's it. That is the rules-based trade. That's the first shot at going counter trend. And Paul, that's why I don't teach the HVA trade in this room, because in order to take it, you have to go counter trend. And I can't spend every ounce of my being telling you guys that your highest advantage comes from trading with the triggers and then say, oh, you know, but go ahead and fight it. But this one has no room to targets. Over and over, guys, no room to targets. There are so many trades to be had. All you got to do is wait for the best trade. It went down. And look at that. When everything agreed with momentum, it pulled right back to the areas inside of triggers and continued down. Bet that happened fast. But if you were calling your shots over here, waiting for it to all agree, that's a pretty good look, isn't it? That's a pretty solid shot. Momentum, 3 triggers, 1 divergence. It pulls back to the mid-band and starts back up. And it makes its target. And it all came from a termination that reversed the market. Pretty awesome, right? You didn't have to trade into the termination. That was your 3 triggers pullback, made it, and now we're waiting to see what it does. Did you learn anything today, guys? I hope so. I hope so. We still have time. I still have time for questions, guys. Still have time for comments. Still have times for posts. It's gotten a little bit quiet in here. I think I've looked at all the pictures. Right from the HVA line. All right, so now Pete, now you've got odds favorable momentum, right? From the termination that produced the HVA. Be interesting to see what happens, right? Was that the low? Is it going to get back above this chart? Can I use small chart momentum to take me there? It's already there. It's into the VWAP. There's nowhere to go. But this is kind of how trading comes to be. What are my advantages? What are my disadvantages? Is it worth it for me to enter the market with what I see? And the better you see things, the easier it becomes to make those decisions. And then, guys, did I mention yet that there's a coupon code for you guys that are in TradingView that want to use Nexgen Pro Trader funding? Winner 100. Go get a free $100,000 evaluation, guys. And it's not new users. It's if you're in my room, this is your coupon. You're welcome. So if you're transitioning over, if you've been studying and practicing hard, and you're like, you know what? I want to go test my plan. I want to go test my plan, but I don't want to put $100,000 of my own money in the market. That's it. You got it. You're welcome. Pretty cool, right, Jen? We are so convinced what we're doing right now is going to change the industry, guys. But we're a new company. We're a growing company. We want you to get in. We want you to test drive us. Hell, we want your feedback. Yeah. John's a nice guy. If you blew out an account yesterday, guess what? There's a coupon. Get in there. But guys, if you're doing it, and then Pete, that's why. But if you're not passing, tell me what you're doing. Sometimes your entries are great, management needs help. Sometimes your entries are garbage and you got lucky enough to make you think they're wonderful. Sometimes you're fighting triggers and don't realize it. Sometimes you're entering late and giving away your advantage. Guys, we'll have a conversation about everything you see. Everything. What do you want to talk about, guys? I guess strong side of the triggers wins, huh? Look at that. This is why I don't teach HVA trades. People tend to get into trades and forget that it's counter trend against the strong side and directly into areas. They're just excited to be in a trade. Being in the right trade. That's where the magic happens, guys. Having the confidence in your methodology, testing your methodology, proving your methodology. Aaron, I don't know, man. Is it better to be trading on TradingView than NinjaTrader? I think it's better to trade where it's easiest for you to follow your rules. I think that both have their merits. I'm comfortable trading on either. If you want to be a part of the funding company, you will have to make that switch to TradingView. If you own software, guys, send your TradingView ID over to Jason. He'll get you the indicators. And guys, just for you guys that are doing both or trying to make decisions, let me tell you what the feedback is, what I hear. What I hear from users. NinjaTrader's faster. And very often, NinjaTrader will have moves that maybe you won't catch on TradingView because of the big, slow bars. TradingView forces you into a position of patience because if you have to wait for a close on the correct side of triggers, you have to literally watch the timer and wait. I've had people tell me TradingView is easier to catch bigger moves because when you're on the strong side of the triggers and there's nothing in the way and you take a pullback to the area and a close on the correct side, and guys, that short entry was right there. Below trouble, strong side most likely to break, and down it goes all the way to the 1-to-1s. And if you were so busy trying to go counter trend, you probably missed that pretty trade. It's freaking amazing, right? John had a broker tell him once, he goes, "Hey, Mr. Novak, I can guarantee you, damn near guarantee you $1 million in your trading account by the end of the year." And John said, "Cool, what do I do?" And he said, "Every time the trend is down, go long. And every time the trend is up, go short. And if you fund your account with $3 million, you should be down to $1 million by the end of the year." And that stuck with me. And he told me that story probably 15 years ago. There are opportunities counter trend. There really are. Shoot, I was trading yesterday, and I took a counter trend trade. I think that was it right there. Jen, you would have appreciated this one. It was a termination condition. My smalls got below, and I took the HVA trade. And guys, this thing went forever. It just ran. And sometimes the tops really are tops. But more often than not, they're little stepping stones, right? There's indecision. Let it prove that it's going to be a top, right? I took the first HVA over here and lost. Then I took the second one. Jen, that was your pattern that I entered on. And it just dropped like a ton of bricks. And I got paid at the first sign of trouble. and I went break even. And I mean, my goodness, it was a great trade. And it was counter trend, but it was the 100% perfect setup. And the second I hit something icky, I was break even. I refused to lose. I hate giving money back, guys. I really do. Um, and if I can't manage my risk, if it's so tight that I can't protect myself, if I'm so deep into a trade that I'm like, man, it would have to come back $400 to protect myself, I'll just say F it. I'll lock in $300. I'll lock in $300, and if they get me, who cares? I just made $300. The goal of trading is to get paid, guys. That's it. How many trades do you guys suppose there are in the NASDAQ every day? If you had to take a conservative number, how many opportunities do you guys find in the NASDAQ? I think conservatively there's probably 15 to 20. 15 to 20 rules met entries. If you made $100 on each of the 15, that's $1,500. If you lost $200 on each trade that lost on the other 5, that's 75% winners, right? That's $1,000. You're still up $500 on the day at $100. And guys, $100 is ridiculous. It's almost impossible to only make $100 on a trade when the rules are met. But the point is, if you're not making money consistently, focus on getting paid first. Home runs are awesome, guys. Home runs are man, I love a home run. But the reality is that if all you do is hit a home run every 8 or 9 baseball games, you suck as a baseball player, guys. It's getting on base. That's what creates success. Make $200 a day. That's it. Make $200 a day. Figure out how to do it. Turn that $200 into $1,000 a day by mirroring it on 5 accounts. Do the same trade to get 200, turn it into 1,000, make $250,000, only capturing $200 a day. It's something to think about for you guys. Well, I'm up $500, but I'm going to keep trading. I'm up $1,000, but I'm going to keep trading. How many people have been up $1,000 and had a losing day? I have. Full disclosure. I've been up $2,000 or $3,000 and had a losing day. And pardon my French, and